Mauritius's annual average inflation rate unchanged at 3.6% in March. It's been reported that inflation was starting to bottom out after declining for 14 consecutive months. Let's delve into this. Joining us on the line from London, Geron Tudor-Jones, Sub-Saharan Africa analyst at Business Monitor International. Geron, thank you so much for joining us. So, do you think inflation has bottomed now in the Mauritian economy?
Oh, there's certainly signs that that's been the case. And since falling to 2.9% in January, inflation now stands at 3.6%, and we believe it's likely to head higher over the course of 2013. And we're forecasting it to reach somewhere between 5.5% and 6% by December, which is broadly in line with the Bank of Mauritius' own projections.
What are your views now if we're looking at the growth side of things? Because Mauritius's growth forecast or growth, GDP forecast for this year being cut recently to around 3.5%. Where do you stand when it comes to your GDP forecast? And what are your thoughts right now on the health of the Mauritian economy?
Well, we're slightly more positive in this regard. And obviously in terms of price pressures, we expect a definite uptick in demand pressures over the course of 2013. Following quite a difficult 2012, we see growth coming, as you said, at 4%, driven partly by a gradual improvement in external conditions, particularly the Eurozone, which is a key trading partner for the country, which is to see a pickup in exports such as textiles, sugar, and most importantly tourism, which accounts for around 10% of the country's GDP. Also, we expect to see strong growth in non-traditional high value-added sectors such as the financial services, real estate, which the government is championing quite strongly at the moment.
So, if you're looking at growth being slightly higher than forecast, do you expect that to have any upside risk to inflation, or what is your view right now on the risk that we are seeing to inflation, and is it more likely to be to the downside or the upside?
In terms of inflation, we're probably slightly more to the upside. Obviously, with our growth figure being slightly higher than consensus in this area. Although we don't see the chances of inflation ticking too far beyond the bank's target range as being a major threat. Though obviously, the main risk will come from any major increase in either global food or fuel prices, which the Mauritian economy is very susceptible to fluctuations in. So, and any fluctuations in these two key commodities would pose serious upside risks to our forecast. But at the moment, we think we're fairly confident with our forecasts.
I mean, you're looking at inflation right now, it's sitting at 3.6%. So you are getting a real return with the benchmark rate of the Bank of Mauritius sitting, or the repo rate is sitting at 4.9%. But if you've got inflation ticking up to above 5% by the end of the year, that means you're going to start moving into negative territory when it comes to real interest rates. What are your thoughts right now on the direction of monetary policy, and what are your thoughts in terms of any changes potentially this year?
Well, I mean, so as I said, the bank's kept rates steady since March last year when it cut the policy rate by 50 basis points to 4.9, the current level. We do expect the bank to maintain this stance for a little while longer. The bank's said in its March monetary policy statement that it's clearly mindful of these sort of external risks and the prevailing economic uncertainty that's still there. And for this reason, we believe it's likely to wait until the second half of the year before
hiking
rates. We see the bank currently. Our end-of-year forecast is for rates being at 5.2%, which implies a 30 basis point hike. And so, obviously, any acceleration in inflation beyond current expectations could see this action brought forward, obviously, to the next meeting in June.